Welcome to the Techno Fundamental Report for March 27th. We got to protect our money. This is too hard to come by. We all work hard, we pay taxes, and if we have anything left over, we save it. I've pretty much made a decision a long time ago to save about 25% of my income per year. I've been doing that for quite a while, and it has really made a difference in my life. Now, when it comes to the market, we don't want to be naive. We want to be aware of the fact that there can be pain, but we also have to realize that no pain, no gain. You've got to speculate. But there are times where, like we're having right now, that could be difficult, a difficult period. You just have to know what you're doing and get through it. So, as we see the market trying to bottom, trying to rally, we're going to need to kind of stick our toe in the water a little bit. And you don't want to become complacent. You want to keep an eye on what's going on. And you need to realize that the latest survey done by AAII, American Association of Individual Investors, their recent survey, is just reaching record levels of pessimism. And Buffett always says, he said, we simply attempt to be fearful when others are greedy, and to be greedy only when others are fearful. So when everybody is dealing with a ton of fear, it usually means you're getting close possibly to a market bottom. Now, Schwab, and I just found this out last week, has an indicator on their webpage called Stacks. And it's an interesting indicator because what they're doing is they have 35 million accounts. And they take a sample every month of what they think makes sense. And they measure, are people selling or are people buying? Now, this is the retail investor now. Now, the latest reading in February, we kind of got a little bit of a bounce, but you can clearly see that, since 2021, retail clients have been pretty much net sellers. So this is just another way to see sentiment. And everyone is very pessimistic, and that's usually where markets form bottoms. Now, I want to talk a little bit about the follow-through day. We've been talking about this for a couple of weeks now. And it's not, as I have said over and over, it's not a panacea. You could have a lot of false signals. But I went back to 2018 just to kind of form an example of what can happen here. So you can see here that around September of 2018, the market made a top, made a lower top, and started to break down. And it broke down. So many of us would have said, hey, this could be the bottom after such a dramatic drop. Well, we did get a rally, and it would try to suck you in. Now, this was a follow-through day. You can see where the volume came in higher than the prior day, and we had a nice, meaningful move. But it got up to the 200-day moving average and then failed. So this follow-through day failed. Then, everyone could have been saying, this is the bottom, this is the bottom. We get a rally, and it starts to suck everybody in. And we get up to that 200-day moving average. We didn't even get there. We actually made a lower high than this high, and then it failed. But here came the magic period. This was the period where we got the follow-through day, and we stayed above the 21-day moving average. I mean, the low stayed above the 21-day moving average for at least 3 consecutive days. That's kind of important. So be aware of the fact that even if we do get a follow-through day, in this particular example, which I don't think is I think it's possibly very similar to where we are now. We get a low, we get a follow-through day, we make a lower low, get another follow-through day, then we make the low, and then we rally. So it's 1, 2, 3. So 3 is the magic number. Now, I also wanted to mention our experience with Tesla, because Tesla's really been in the news lately. We've been involved in Tesla since it went public in 2012. And actually, I bought the first Tesla in Louisiana. I bought it out. I had to go up to see my daughter in Tacoma, Washington, where I went to a Tesla showroom. And I wasn't going to buy the car. I just wanted to look at it. But after my wife and I drove it, we decided to go ahead and buy one. So we've been involved in the stock for a long time. And basically back in 2020, we got a major buy signal here. And that was around $40 a share approximately. Then the stock just started going up. It had a pullback. And then it rallied up here to about 400. So we were up about tenfold on our move here. And so once we started to see that top and then that lower top and the breakdown here, we started selling the stock and we got out of the stock. Now you can see it went all the way back down to about $100 a share from 400, but then moved sideways for an extended period of time, rallied again, made a new high, but you can see we're back to where it was back in 2022. So using the follow-through day and buying the right stock can really make a difference. Now let's look at the FANG stocks. Now we all remember the FANG stocks, and the reason I mention this is that the Magnificent Seven or the FANG stocks are starting to lose their leadership position. Now this goes on in corrections, and that's what we're in right now. We're in a market correction. It's not a bear market yet. Could be, but it's not one today. But anyway, these corrections usually indicate a change of leadership. It's like the beginning of the end of a group and the beginning of a new group that'll surface. Now we have a problem here. We really have two problems. The first problem is the market's not good. We're seeing a downtrend. It's very difficult to make any money in this market. But then the second thing is we've got to figure out what the new leadership is going to be, and it's just not apparent right now. We just can't find it. We look every day. So here are the FANG stocks, Facebook, Amazon, Netflix, Google. And you can see here they've really taken it on the chin. And they're trying to rally, but then they pulled back again today. Now, NVIDIA, again, we can't be naive here. Everybody likes NVIDIA. I hear about it every day. People are asking me about NVIDIA. And all I can tell you is that the stock peaked really back here last year and has been pretty much in a downtrend ever since. And, it broke down pretty seriously today. So is it a bubble that's popping? I don't know. It seems like to me there was a lot of interest, too much interest in artificial intelligence, AI. I'm sure it's going to be a big deal, but it's just not going to be incredibly obvious. You also see here with the semiconductor ETF, you can see a breakdown here in all the semiconductors, and they were like one of the hottest groups over the last couple of years. A little bit of good news here. The interest rates are moving sideways, so we're no longer, they're not going down, but they're not going up either. However, over the last 125 trading days, interest rates are up 17.36%. So we've seen a big increase in rates, but they're now moving sideways, which hopefully that stabilization will reduce a lot of uncertainty. Now, last, I want to mention the aggression index. This is where we're measuring technology stocks by the NASDAQ compared to consumer staples, which are toothpaste, toilet paper, ketchup, mustard, that kind of thing. Things you have to have. So when the staples start outperforming the technology stocks, that's just not a good sign. So as you can see here back in the bear market, we saw a breakdown in the aggression index. We're seeing something somewhat similar today, and what's starting to bother me here is that not only has the 10-week moving average turned down and headed lower, but now we're starting to see the 40-week turning flat to down. So it's just not really improving. So main thing is this, keep your watch list up to date. If you're going to do some buying, keep it light. However, we think you have to have some cash on the sidelines right now. So if you have any questions, please let me know. Thank you very much.